So the trade in the morning was the Dallas or Delta Airlines. So it kind of got to those all-time highs. And one of the things I was kind of watching for was like a pull-in trade into the all-time high. It got a little bit below that, but it came down back up to D-block.
All right, so let's just talk about this. Important trading principle. What basic question. What does Delta do?
They're an airline.
Okay. So, how long has that business been around?
A lot of years.
Okay. Anything new in the report about their business? Anything they're announcing structurally different about the overall business of airlines?
No.
Okay. Anything new in the report? So you want to start to, when you're thinking about certain trades, if a company's been around for a really long period of time and we kind of know what they do and there's no surprises and there's no innovation, then we need to set a different standard for whether or not we want to trade it, because our job as intraday traders is to be really efficient with our capital. Okay, we don't trade with $1 billion. We don't have a book of a couple $100 million that many of Dr. Steenbarger's
my personal account.
I thought that was private. I didn't want to air that. So we have to be very efficient with our capital. The huge upside is that we can get in and out like other people can't. All right, and so when you say to me, I want to trade Delta, my initial reaction is, boy, that better be a really good opportunity, or else it's not going to be worth my time to sit in my seat. And I want things that are going to move around and that are going to be much more volatile than the overall market. And even better, that are going to be directional in terms of strength or weakness to the overall market. Okay, and so that's generally what I'm looking for. So I got to have in this report something really outstanding, more so than I would something in cloud computing, or more so that I would have in biotech right now, certainly more so in marijuana stocks, certainly more so in anything China, Bitcoin. I mean, you heard those guys laughing. I mean, they literally bought 100,000 shares of something that spiked up on the radar because there was a price spike, and it's related to China and blockchain. Okay, and some of the guys made, I think overall made like a quick 30 grand. It's just sort of playing a different game. Okay, and so do you feel like this was something you really wanted to? Do you feel like this was a really special opportunity in Delta?
Not special, but relative to what I could find, at least worth watching, but not special.
So the other thing is, when you say relative to what I can find, is there a rule that you have to trade every day?
No, and I've been battling that. No, but sometimes I feel like if I'm not doing something.
You do not trade on a particular day. Are we is the FBI going to come in and take you out?
No.
Now, having said that, when you get better at stock selection, you're going to find it to be very rare that there isn't something to play. But you got to think about how you make money over the course of the month, and you're going to make money over the course of the month in your best trades. And the way you get better is being bigger and better in your best trades and doing less of the things that just aren't really any good. And I can tell you that this is a red flag for being in something that's going to take away from your better trade. And so it's got to be, when we're talking about a Target, or we're talking about, a Boeing, we're talking about, I was going to say Walmart, but actually Walmart has been innovating quite a bit recently with their online stores, their online presence. buy stuff, you pick it up. People like that. That's new. That's new. So, you know, is there something new about Delta? Is there something great about the earnings that is a little bit unexpected?
Yeah,
Okay.
but not anything like new necessarily.
Okay. So what was great about the earnings?
They beat earnings, they beat revenue, nothing like outstanding. I think they beat earnings by like not 7 or 9 cents. And then they raised the full year guidance, which was
And then the next question, so they raised for your guidance, you want to ask by, what's the next question after that?
by how much?
Okay, how much did they beat by?
I don't know, it wasn't outstanding.
That's the point when you're looking at stock like that. It ought to be outstanding. You know, you want it to be at highs or above key levels. You got to ask for more for this to get your attention. All right.
And just one short addendum to that. Even if it's outstanding, as you're pointing out, Mike, if the volatility isn't there, you're just not going to get much movement. There were a couple of things here that I could see to trade, and you know, we tested here, you know, the opening lows, and it couldn't go below, and then you could catch some of that pop here. Well, what the heck? It's going from 56 something to 57 something. That's the move. That would be a really good trade, but that's what a big cap stock is going to give you in a 10 VIX regime. So even if the news is good, you won't necessarily get that volatility. Now, if you trade enough size, yes, that could, you know, start to matter. But once you see, you can take a look at relative volume. You know, are the moves at your time frame? Are the moves going to be significant? That would be the question I would ask.
Yes, I mean, I just wanted to just kind of add that, so one reason why I was looking at this and why I did end up trading it was because one of the things I've been trying to do is like focus in on like some of the things in my playbook and like try to like concrete like my setups. And for me, one of them is like a regular all-time high pull back into the level, which this was. And so at the very least, it was just like an attempt to just like practice that idea of like being patient, like bidding at the bottom of the wedge, just like having discipline. So that's what really attracted me to this. And there's a few stocks that like gapped up above all-time highs and pulled in, but this was the one kind of like did my playbook the best. So that's kind of why.
And did you sell it? Did you hold it?
I bought. So like, you know, after this move, kind of came back in and like started bidding back low with the stop right type of, it was 25. And then, you know, you could kind of see on the tape when it got above 50 cents, there was like a big flush to add here and added on this wedge above VWAP. And like, I mean, I was targeting maybe unrealistically, like a break of the pre-market highs if momentum came in, because there's no resistance above, but like taking scales, you know, evenly throughout, like targeting like 60 something, 60.
What did they say?
Which your entry is excellent.
Right. And so
Your thought, you know,
yeah.
From a process vantage point, you know, this vehicle didn't give you a lot in this
Right.
but in terms of the practice, in terms of your thought process for the entry, just excellent. The thought process for the exit, you got to take into account how much volume is trading and what the likely volatility will be given that volume, and how far is it likely to move in X amount of time, and you know.
Yeah, what did they say on the call?
I wasn't listening to the call.
Because that's when the big up move happened. Right at 10 when the conference call started.
Yeah. All right, and so, you know, if you're trading a stock, you need to know there's going to be a conference call, and you need to be listening to it if you have a position in it, and you want to know more than a lot of other people in that name so that you can react appropriately when they say things that are important. Oh, should I wait till it's over? Because they could say during that, you know, before the call, you could see that support at 54.20, and you can see the support at 54.20. You can see the support at 54.20, and Delta during the call could say, we are going to have to pay 30% more for all of our fuel for whatever reason, and the stock would fall.
Yeah.
You know, or so you don't know what they're saying. And things like that happen. And your first job is to control your risk, right?
Yeah.
All right, what else? I want to talk about Kodak. K-O-D-K. There's a lot of actually pretty good lessons in here. So, can you just show today? So, we open up, this is what I was saying to you, Andrew. I didn't really think you were going to get that opportunity for it to go back up to that area. The chances that were low. So we wanted to game plan. We wanted to game plan. You want to game plan other potential ways to get in, and opening drive that we were talking about in the morning was one of those places. And so we had that, and then it goes down there. The thing about this stock is that it's crowded, right? And so, and there are a lot of people short this, right? There are a lot of smart people out there that say, hey, this thing should not have gone up as much as it did, and it should go back to 6. And the reasons are 1, 2, 3, ABC. And it's below yesterday's support, which held up. And so you have that downward, and goes back up to where it started on the open. You know, that is just an example of like lots of people leaning too short. And if you're going to trade this stock, you've got to be thinking about the other participants in this stock. You know, when that goes down from $10 all the way to $9, and pop backs up, there are people out there, even retail traders, who are really going to short. They're going to get aggressively short, and they're going to add more to their short. And so when you see that up move from 910 all the way up to 980, that may just be some people that are trapped. That are trapped. And so when I think of the stock, I watch that down move very carefully from that up move. I want to watch that up move, and then they set in a pretty nice range between 965, and it got below there, and I added to my short. I mean, 965 was holding up, and when it got below 965, I was like, all right, shorts are done being trapped, the momentum is to the downside again, and I started to add. But this is really important when you're trading, which is you gotta watch what's going on. And what I did not like for my short position was there was so much buying on the bid. There was way too much buying on the bid for me, for my thesis of this thing is going to get to 8 really fast and maybe get to 6 today. Way too much buying. You want to be thinking about why you're wrong in a position. You want to be thinking about maybe you're wrong. And not that you are, but you got to be thinking about that. And so there's too much buying at 65 cents. There was too much buying at 50 cents. There was too much buying at 40 cents. And so when that stock breaks down below there and goes back down, what should you be thinking? What is a possibility for this stock? And I added to my short, and I'm still sitting in it, but what's possible? Anyway.
I mean, all those bidders are going to be trapped.
Yep, we could all be trapped. And it wouldn't even be that the stock is strong or weak, it's just we're too short. Okay, and so, it'd be great if it doesn't happen, but I've got to be, and I'm shorting it and I'm staying in it, but I've got to be thinking about that. I could very well get wrong and get blown out above 10 right here, and the stock still be, as Cindy, where, for your swing trade to the short side, that swing trade could still be entirely on for a 2 or 3 day play, but for an intraday sort of ad, we could get blown out. I would also expect that this thing gets below and touches 915. I am going to add to my position because, to me, now the momentum is to the downside again. And if I'm going to sit through, I did add a little bit up there, but if I'm going to hold and not do anything around here, When that makes a new low, I have to add to my position. I have to add, or else I have to take it off. It doesn't make any sense for me to be holding and just sitting here in this position and make no trade decisions at 20 cents and 30 cents, and then for that thing to get to 15 cents, and for me not to put on more risk. That makes no sense. I either have to take off and make a trade decision and get lighter, or I have to add to that position. It is wrong not to add to that position. And so, and now I'm certainly not going to match the size that I have, but I've got to put on more risk.
One little piece here, I'll ask a medical question. You know what an EEG is? What's an EEG? Come on, guys. Yeah, what's it measure?
Heart rate. Pulse.
Brainwaves, yeah, brainwaves. Okay, so let's imagine this is an EEG pattern. This shows up. What do we say about the patient? It's fucking dead. That's a dead patient. Look at that. They just flatline the EEG. My point here is, obviously, look at that volume, you know? And so, now, if all these people end up getting trapped, per Mike's point, and you start seeing some volume coming in, you got to add to that trade. But in here, what are you trading? There's no volume. It's not moving anywhere. And so you want to look at the evolution of volume and how that impacts volatility, because otherwise you're sitting there trading a dead patient. And there's not a lot of profit in working with dead patients.
I got a question. So like when you guys are trading like the ride and the estimate, like I feel like they're a lot more patient with their levels. But it seemed like today with Kodak, like people were willing to really get involved with like trading with the 40-cent range. And I'm not really sure. Like when I saw it, I was like, oh, I'm not going to touch unless it gets closer to 10 or 10. Like I've heard like other guys the next time like wait like for dollar moves, but it seems for much more.
Yeah, I think you want to sort of. So I think a lot of people think this is a really good idea, that this really could go to $8 today. I think there are people that think that. And so when you think something can really go to 8 and it starts to get up towards, 970, you're going to get pretty interested in watching what that looks like up there. And you may have to get in a little bit earlier than you want. If something's going to be weaker overall in the day, you're probably not going to get the very best prices that you want. You're going to have to see it near the level, but not necessarily at the level, and be able to adjust to short it a little bit lower. So, when that goes up to 975 and 980, I think if you were watching the bigger guys, they certainly, if you were watching the tape and you were trading this, 100% there was a trade decision down there at around 910, where you had to take off some risk if you were short overnight. And I did take off some risk, and I noticed Shark took off some risk. You have a trade decision there. There's too much risk on the open right there, and it's not really going down anymore. You have to take off risk. But then, if you're going to stay in your swing position, you believe in your idea, when it goes back up towards a level that you think is interesting, you may not get exactly the price that you want, but you start to watch. And if you start to see some thickness on the offer, you start to see some weakness on the tape, and you really like the idea, you're going to put some of the risk back on. And so, if you're watching that, I think around that 80-cent level and 75-cent level, at 70 cents is where it starts to get a little bit thicker. And then it tends to kind of get through there a little bit. It's a crowded stock, but that was where you could see there was a trade decision there about putting risk back on.
Yeah.
And it was different. It was different there than it was at other points on the way back up. It was just thicker. There was more selling going on. So I think when you start to get flat like this, I tend to like that. I think that's probably a better sign for me. I'll say pros and cons. Like I put that in the pro column, that it's getting a little bit deader for the short. So what sort of stuff? Does that answer your question or no?
Well, it's one problem is that if you're getting it short at 75, 80 cents and you stop above the highest day,
it just feels like that 95 cents, like that's pretty close to like the 10 level, like on the higher temper chart. And it's leading into like the 10, 15. It seems like unless you're adding into like 9.8, you're kind of thinking, I'm going to hold this until it gets to 11, and then you have to like size accordingly. It just feels like it's, I don't know. It just felt like it was like too close.
It's a swing trade. It's a different way of, it's a harder, I think this is probably not the best trade for you to be thinking about. I think it's a more advanced swing trade with a thesis behind it that will take you some time to be able to trade. I think for you, if you shorted that at 970 because you show some weakness, I do think you have to cover that above 10 and think about re-engaging for another trade. Maybe there's another trade. Maybe you see sort of a stuff trade above 10 on an intraday basis, and then you re-enter off the stuff trade. But I think if you're going to short that up move at 970 because you see some weakness and you're looking at the pre-market levels and it gets above 10, that trade didn't work.
Yeah.
So you exit, and then now you need a new trade.
Yeah.
But yeah, those guys are trading it differently, and their stop is bigger, and they're trying to make more money. You know, they think it's going to go to 6.